right, what's up with Bitcoin? So I want to, do a short review on some of the articles that just came out, been published by some, self-appointed Bitcoin experts, but pretty good articles. There is, let's go right into it. Okay, you can see me, you can hear me, I guess. Yeah. So let's see where we are. There we go. Welcome to the Total Connector Show. My name is Keyvan Davani, and well, yeah, it's a mainstream magazine, but still pretty good article. I think it summarizes some of the aspects, some of the points, what's been going on with Bitcoin, why this surge in price. There's no reason to panic. There's no reason to be like you know all too excited. It's just a normal process as I see it. There's so many factors in play. There's so many interdynamic factors in play. There's some which you cannot change, which I'm going to talk about a little bit later. And there are some factors, parameters, processes that individually or institutionally or collectively or as humanity or as educators we do and we can and we will change, speed up, accelerate, whatever you will call it. So there's this article on Forbes.com by Mr. Kyle Torpy, crypto and blockchain, three key drivers behind Bitcoin's price potential mass adoption over the next 5 years. So he's referring first of all to the article by what's his name? Sorry about that. The article is called Bitcoin in Heavy Accumulation from April 8th in 2019. Probably most of you have read it already. It's from the Capital, whatever equity investment firm, Adamant Capital it's called. And the guy, I think the author or one of, I guess he's one of the authors is Tour Demester. And as one of his quotes is, investors and fund managers likely do themselves a favor by keeping an eye on Bitcoin. Well, of course, yeah, they should. So you can check it out for yourself. It's the link is right in that article too. You gotta just sort of subscribe and then you can unsubscribe again. But in order to get that article, you need to put your name in it. I understand the privacy concern, but it's a really thorough article, pretty much really elaborated. And so there's the highlights of this report are blockchain analysis suggests Bitcoin whales are now accumulating. Significant parallels with the 2014 to 2015 bear market have emerged. Hodlers almost break even with estimated aggregate losses of $3 billion. Recent volatility lows suggest retail apathy, market bottoming. Demand shock still possible from exchange hacks, minor capitulation. Bitcoin's secular bull market is supported by strong fundamentals. So yeah, and there's a bunch of really nice quotes by different Bitcoin experts, financial experts. One of them is called How to Position for the Rally in Bitcoin November 2015. There's a quote that says, "We maintain that the risk-reward ratio for Bitcoin, the currency, is currently the most favorable of any investment in the world." All right, so check it out for yourself. Going back to this article, three key drivers behind Bitcoin's price and potential mass adoption over the next 5 years. Just summarizing here, it says first of all, preservation of decentralization. With the quote by Tour Demester and Michael Lescrovet, Bitcoin stays close to its roots of being a lightweight, robust, and universally accessible protocol, says the report, which was co-authored by these guys, Demester and Lescrovet. And then it says specific examples of the low resource requirements of operating a node on the Bitcoin network, often viewed as a measure of decentralization, The report points to the ability to obtain blockchain data via satellite and run a full node on an Android phone. So this is going to be like really evolving at a rate of speed that we can't even probably fathom. Meaning, having the application is going to become more user friendly. This is the most important stuff that's hardly ever mentioned. The application got to be user friendly. It's got to be really user. If you want to really have mass education, mass adoption, mass functionality, mass transactions, we need applications that it's like you plug it in, internet. Like the internet. It's the internet of money. All right. So this is what we need. And yeah, and then on top of that, once we are like independent of the internet, like you can, pretty soon, like in a very, smooth and easy way, I guess pretty soon, whatever the developments going on by Blockstream, Adam Beck, all these innovators, the technological experts, cryptographers, the coders, the programmers, all getting together, collaborating more tightly and learning from their own failures, and so this is going to evolve at a rate of speed that we can't even imagine. All right. So it means like being independent of the internet and transacting via radio signals and satellite broadcasting means you are totally independent of the internet. That's huge. All right. All right. So the report also points to the continued development of the Lightning Network. It says here already surpassing altcoins or shitcoins, as I call them, by some measurements. And sidechains, which both allow users to transfer Bitcoin improvements such as Taproot and Schnorr signatures to improve privacy, right? And smart contract functionality on the network. So this is a huge factor. Privacy is going to be a huge factor. Once we get that, Andreas Antonopoulos says the privacy should be resolved on the very first layer of Bitcoin protocol. But I'm not a technical expert, so there's a lot of controversy discussion going on. Final report points to the increasing decentralization of mining in this section. The commoditization of chips and the movement of successful miners to politically stable countries with cheap electricity are mentioned as two examples of this point. And don't forget, as I mentioned in my interview with Gigi in English and German version, you can check it out on my YouTube channel. Please like my videos, share them if it's beneficial to other people, if you think it's beneficial, and activate the bell button, please. And yeah, what I want to say is that the increasing efficiency of the hardware mining equipment. That's going to be like, as an accelerated rate of speed. We're talking about technology, all right? And it's so funny, in this sector, it's like going at a rate of speed. It's like we could have never imagined. Smartphones, 10 years ago, we could never imagine that, all right? So this is what I'm talking about. So what I find is that just as a side note, it doesn't have digressing a little bit, but I find it a little bit peculiar that we don't have that evolutionary transformational processes in other technological sectors. Would it be transportation, right? We're still working with combustion engines, burning fuels and all that shit, all that environmentally really polluting crap. Anyway, let's go back to the article. Financialization of Bitcoin. Yes, of course. Yeah. So the financial sector is coming in. The pension funds are coming in now. At least cautiously, like tiptoeing with a fraction of their whatever trillions and trillions they're sitting on. I've heard that the global pension funds are sitting on approximately 40 to 50 trillion dollars. All right, net assets. All right. So just imagine, 1% or 10% would just flow into Bitcoin. We're talking about like a huge expansion of market capitalization. It's like a black hole. Bitcoin is the hardest money with absolute scarcity, harder than gold. I'm going to come back to that, what factors are going to play a role, which are not, which are just immutable. All right. And it's set in stone, the parameters and the factors, such as the halving of the Bitcoin rewards. It goes to the miners, so it's going to be halved again in May 2020 from 12.5 to 6.25 Bitcoins, and then the Bitcoin halving the 4 years after that in approximately 2024. That's going to increase exponentially not only the scarcity and the hardness of Bitcoin, but also or emphasize the scarcity, but also the stock to flow ratio. What is here and what comes additionally every year. That is why gold is relative scarce, Bitcoin is absolutely scarce. This is so important. It's the one fundamental principle, I think, the total humanity, the 99% of humanity, which is still doesn't get it, or just doesn't have maybe the connection to that, because we've been so brainwashed with how money works or what is money and stuff like that. So anyway, financialization of Bitcoin, blah blah blah. Yeah, of course, Intercontinental Exchange, which is the parent company of the New York Stock Exchange, partnered with blockchain technology company Blockstream, right, to create a cryptocurrency data feed and announce the Bitcoin futures platform Backed, which is expected to launch later this year. Additionally, 2018 was the year Goldman Sachs invested in crypto asset custody solution BitGo and TD Ameritrade backed the Bitcoin futures platform known as Ares X or something like that. Then we have 2019 Fidelity Digital Custody, NASDAQ Bitcoin futures, and a crypto asset custody solution from Northern Trust are all expected. So anyway, yeah. So these are all the institutions that gonna, just with all their the processes going on behind the scenes, they will just speed up this whole process of finalization, of hyper Bitcoinization. Bitcoin's qualities of political neutrality, unparalleled security, globally accessible liquidity, and predictable financial policy are provably improving, says the report. It says, as a quote, as it goes on, the quote, as it matures, we expect for Bitcoin to disrupt the $100 trillion investment vertical of liquid store of value and become a globally used digital gold and reserve asset. And to be honest with you, that's just the beginning, I think. All right, in the next years and decades to come, we're going to see, huge transformational changes. And of course, the people, the millennials, the X generation, whatever you want to call them, they're all coming in. They've learned from the 2008 crisis. They have, become a little bit more wiser, more intelligent, more cautious, more prudent, with their savings, with their investment, with their finances. So it says here, as the disposable income of millennials continue to grow, we expect further tailwinds in terms of Bitcoin adoption and price appreciation. Supported by over 10 years of infrastructure development, we believe the stage is set for mass market adoption in the coming 5 years. And that's what I said. If you check out also the stock to flow ratio by, what's his name, Plan B, the guy with the pseudonym Plan B, you should check him out. He's done a pretty good charts. The stock to flow ratio, modeling Bitcoin's value with scarcity. So you can check him out on he goes by his Twitter handle, $100 trillion US, something like that, right? Yeah, something like that. 100 trillion US dollar. It's a sort of a reminder of the $100 trillion Zimbabwe note. And that's what happens, right? Hype inflation. That didn't even, by the way, not only happen in Zimbabwe. We had like 1920s in the Weimar Republic, where the kids were like playing dragonflies, whatever, with all that hype inflated notes. So and this is like one of these charts. I don't know how precise that is, but it's at least a pretty good estimation prediction. The stock to flow ratio right now is at 2. So it's going to be, I don't know, 2019. It's not, but in 2020, by next year, by the next halving, meaning the halving of the Bitcoin reward, as I mentioned previously, that goes to the Bitcoin miners, will go from 12.5 Bitcoin to 6.25 Bitcoins. And then the 4 years after that, in 2024, as also mentioned, will go from 6.25 to 3 point something. All right. So the stock to flow ratio will increase exponentially and will eventually, definitely, exceed or supersede the stock to flow ratio of gold by the year 2024. So it will mean this means Bitcoin for the first time will become the hardest digital scarce asset. No, the hardest money with absolute scarcity, and that's why I said, gold has a relative scarcity. There's approximately 195,000 tons of gold existing stock, and additionally, every year there comes approximately 1.5 to 2% additionally. So approximately, I don't know the numbers to be honest with you, and the amount of gold, but maybe it could be like 3,000 tons. I'm not sure to be honest with you. All right. Um, but it means like every year there's like, it comes constantly some more gold. So that's why it's relatively scarce. But Bitcoin is absolutely scarce because the total amount of 21 million Bitcoins is set in stone since the release of the version of zero point 0.1 by Satoshi Nakamoto in 2009. So that means that, yeah, I mean, hardest money. This is what we've been looking for. I mean, this is like the hardest money that has ever been created in human history and evolution, in monetary history and monetary evolution. So, yeah, whether it's going to be a transactional medium or not, in the total population or total planet, that doesn't matter. Again, it's a store of value. It's a reserve asset. It's a, reserve liquid asset, whatever you want to call it. All right. But this is something you can build on, your wealth, your future, your family. Pass it on to your children, to your grandchildren. This is something that will, exponentially grow, into millions. And eventually, I estimated that one Bitcoin will be worth in today's purchasing power. Forget the dollar and euro. I'm just talking about the purchasing power of $1 billion in 2069. Well, I don't know whether it's going to be alive or not, but doesn't matter. 2069 is still, a long time to go. I understand it, but just consider it, perceive it as a process. Every year, every 4 years, in every process. So, and with all the, with the difficulty adjustment of Bitcoin, meaning the hashing rate, whatever, and the process of of how fast. I mean, there's something set in stone. All right, approximately every 10 minutes, a block is produced. Every 210,000 blocks, the Bitcoin reward is halved. So these are the parameters, the factors, the conditions that are just set in stone. All right. And nobody controls Bitcoin. Again, all right, it's not the miners, it's not the users, it's not the financial institutions, nobody, not the governments. Even there's some government officials, even in Iran. I mean, even in Iran, they now admitted that they cannot stop Bitcoin. They cannot disrupt it, manipulate it, or whatever, all right? So this is, beautiful news, all right? And it's about comprehension. And I think education and breaking down the language of all these geeky, really beautiful, magnificent, really, I'm not cynical, all right? But we really need to break down this geeky, nerdish, Austrian economist language to like, either the pain points, people feel it, or feel the financial, economic, existential pain points, like people in Venezuela, Turkey, Iran, Argentina. Inflation, hyperinflation, recession, all these things going on, impending crashes, implosion, soap bubbles, like in the U.S. Federal Reserve, and pumping money into the stock market by trillions. Or we understand individually and collectively whether we have pain points or not, but especially like we in the Western, whatever developed nations that have a bank account that, we can identify ourselves. There's billions of people don't have identification. These are the people we're talking about, all right? And then people, like middle class people, people who are still comfortable, who have no problems, no pain points. These are the people we should, at least in the Bitcoin community, collectively in the community, sort of work together and break down the language, visualize it, whether it be a cartoon, a documentary, or workshops or whatever. Like break it down. What does it mean? Not only on the monetary root layer of Bitcoin, but what does it mean once Bitcoin is the monetary root layer that makes all these other rotten criminal roots of the central banking structures obsolete? Once we have that, what does it mean for me, for you as an individual, for our families, for transactional processes. What does it mean for civilization? What does it mean for the human civilization? All right. What does it mean for the Austrian for economists, for economics, for finance, for building up wealth, for entrepreneurs? What does it mean for when a digital scarcest hardest asset like Bitcoin increases in value exponentially? There's no inflation anymore. It means that's what it means actually, deflation. That means if one Bitcoin is 100 million Satoshis, what can you do with one Satoshi in 4 years? This is the question you should ask. You should be asking yourself, and you should be asking others. This is what I'm saying. I know I'm repeating myself a little bit, but this is such an important fundamental principle to understand. For all of us, like, don't think like the mainstream reaction is like, oh. Bitcoin, has been going up in price, been going down or whatever. Well, why don't you see just one Bitcoin is 100 million Satoshis? What is the purchasing power of one Satoshi, of one Bitcoin, of one subunit of Satoshi in 1 year, in 4 years, in 10 years? This is the fundamental principle question we should really comprehend, collectively. Anyway, that's about it with my rant. I hope you had a good time with me. And let me see if I can show you anything else. You can please follow me. Please like if you think this video, this knowledge, the sharing of my knowledge. I really have so much love, within my heart and soul, but we can only do this together. And we don't need to fight the old structures, the old system. Once we create the new structures, the new, network consensus, decentralized structures, once we have a structure that is immutable, open, neutral, non-political. We don't need political structures. We don't need any dogmatic structures. And once it is, we have censorship resistant networks. This is what I'm talking about. Then everything changes, not just the monetary, financial, economical structures, but everything around it, societal, scientific, technological. The patent system's going to be obsolete sometime, hopefully in the future. All right. So this is what I'm talking about. And then all these disclosed, suppressed technology is going to come out and serve us as humanity. This is all I have to say. Please follow me on Facebook, on Twitter, on my medium.com / at Keyvan Davani. These are the articles I've wrote. On LinkedIn, you can follow me. And thank you so much for watching. Thank you so much for commenting. Please leave a comment, leave your questions, interact with me, and let me know what what do you need to know. What do you need to know? What kind of experts do you want me to interview? And Gigi, I think, in my opinion, even though he doesn't want to be called that, but is one of those people who are whatever in the technological aspect really, and the Bitcoin knowledge, really profound knowledge. So this is what I'm talking about. All right, we need to share knowledge, share wisdom, and together we can create these new processes, this triggering our civilization. All right, thank you so much, and I'll see you soon again. Keyvan Davani, Total Connector. Bye.